Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. We're going to go over gold and silver. I do some technical analysis. I'm going to go over a lot of things here. I'm going to refresh everyone since I get new subscribers on the thesis of the channel real quick before this, which is ratio investing, tying it to real estate, which is housing starts, and an inflationary period in an expansion phase of real estate. I'm going to show you some crazy stuff in terms of ratios with gold and the Dow, gold to the monetary base, gold mining stocks in relationship to gold, and then I'm going to go into the price action on a lot of the individual gold companies and ETFs. And when you understand the big picture view, you take a big, you step back, you take a big picture view of everything. You see how everything's lining up. And I think that the trigger that's coming is going to be in the 10-year yield going up. Whenever that goes up, I think it's going to spark this rotation. Now, we are seeing the beginnings. We've seen the beginning of all this stuff. It went up from 2016, 2017, 2018. Interest rates were going up at that time. The market started to turn over. And what they did, and COVID fit in there somehow. I think it was a engineered COVID bug, but that's my conspiracy theory, to slow things down and to do things where they could hold interest rates down and have excuses. That's my conspiracy. But we did come back, and they in terms of everything crashing in 2020, market conditions changed for a little while, which pushed stocks higher. And I think we're at the end of this kind of push higher at some point. Again, I'm not going to give you exact timing. This is all big picture view stuff. So I'm going to get into this. We're going to get a big picture view of where my paradigm and how I'm seeing everything with data on charts. I see the world through charts and data. And then I try linking things together. And I think I've created a narrative to support it as well. So here we go. Let's jump in here. And we're going to go right into the gold to monetary base. Now, there's a couple of things I want to let everyone know on the channel. We were on a gold standard back here. Gold standard. We came all the way back down here. They were cheating. They were cheating the monetary base in relationship to how much gold they had. And what happened was people and other countries called them out and started to collect their gold. And that's why they took it off the gold standard. When gold traded freely, the ratio went back, the gold to monetary base ratio went back to when we were back on a gold standard, about 3.5, 4, and that's where we went. We overshot a little bit, but it went back there. Gold at this price is fully valued. So it didn't really have anywhere to go but down. So over time, we went back on down, came on down, and in 2000, it bottomed out. This revaluation going up happened under an inflationary period. They printed too much money, and gold didn't account for it. 2000 to 2008 was also an inflationary period with rising interest rates. Rising interest rates, rising interest rates. We petered out and had a peak in the real estate cycle. Had a deflationary crash. That's what this recession line is. We came back down. And then we were in a recovery phase of real estate all through this time. We are now entering an expansion phase just recently. And we're putting in this descending type wedge pattern, which will break to the upside is my guess. And we're going to see a revaluation of gold in relationship to the monetary base, which means gold's going to go far higher over the years. I'm not telling everyone that it's going to happen tomorrow. What my strategy is to position before the move strategically and wait for this to play out. This is a huge asymmetric bet. What that means is that there's a potential many-fold upside to your return, and the downside is pretty limited. That is what I look for in my investments as an experienced investor. The time frame for this playing out could be maybe the same time frames from 70 to 1980, like a 10-year move or something like that. Maybe it happens quicker. I don't want to speculate necessarily on the time frame and how much it can go up. What I'm saying is the risk reward here is gigantic in favor of gold and the gold mining stocks and commodities in general. Because when this gets revalued higher, it's going to drag the whole commodity complex higher with it. And all of the market conditions are lining up for this revaluation to occur. Now here's the commodity to stock ratio. It's the S&P, I can't remember if it's Goldman Sachs Commodity Index or Global something Securities Commodities Index, an S&P 500 index. It's a ratio. Whenever the ratio is low, you want to buy commodities down below 2. Buy here, and look where we are today. This is our life-changing event that's going to turn everyone's life around when this ratio turns back up higher. Our sell points are these up here. And of course, they name them with oil crisis, Gulf crisis, financial crisis. They name all crises when commodities go up, even though it's not a crisis. And on the bottoms here, they're all bubbles. Stock bubble, stock bubble, stock bubble. And this one's been going for a little bit. I think it was extended some with the COVID crash and gave us a better buying opportunity. Thank the Federal Reserve and whoever else for lowering all those rates and giving us a better buying opportunity and a longer time to accumulate. So what this is telling us is commodities are incredibly cheap in comparison to stocks, and that we have a very good asymmetric bet in terms of valuations in commodities in relationship to stocks. Now here is the new privately owned housing unit starts. This is, it tells us where we are in relationship to the real estate cycle. When we're declining, it's in a recession. Recovery phase is when we're increasing and under this blue line, which is the average housing starts per year. So recovery phase, expansion phase, recession. And if you notice, at the end of most of these declining housing start phases, we have recessions. This is what the gray line is. Recession, 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 recession. It's always when housing market goes down. It's deflationary. Deflationary, deflationary, deflationary. It always ends in these recessions. This green circle would be a buy point here, a buy point here, and a buy point here. Commodity booms happen at the beginning of expansionary phases of real estate. Commodity boom happened here, commodity boom happened here, and a commodity boom is going to happen coming up, given where our valuation is and an expansion phase of real estate that we're entering right now. We are in an underbuilt scenario, 4 million homes deficit, which is very promising for an expansionary phase, which could be a very large expansionary phase in real estate, which is going to be an inflationary push behind commodities. Here's the Dow to gold ratio, and I'm looking at a lot of ratios. Ratios tell us value of asset against asset. That's why I'm going over all this so much. Last commodities boom, we had this ratio really compressed down. We got to a bottom of around 6. The recovery phase of real estate, we have a blowout in real estate. It usually lasts a few years longer for gold to account for all the money that's been created in this expansionary phase. It lasts 2-3 years longer. Then we bottomed. The market conditions changed. We went from an expansionary phase to recession to a recovery phase. In the recovery phase is when stocks do very well. The recovery phase was in this time frame down here, all the way to this time frame up here. I think what we're doing is we're coming to a double top in the ratio of Dow to gold ratio at around 20. And I think we're going to head lower at some point. Don't take this as tomorrow. Take this from month to year. Don't look at the short-term time frame. These are big picture view time frames, everyone. And I think we're going to see this come on lower. This pattern supporting a move lower, potentially if we break to the downside. So I think we're going to see a gold outperformance from stocks. So gold's going to outperform, and it's going to impact the entire commodity complex in a positive way. It means we're in an inflationary environment with rising interest rates. The XAU to gold ratio. This is telling us that the mining stocks are going to outperform gold in the short term, I think. And I think the first half of a commodity bull market, we're going to see mining stocks absolutely rip it. But we need interest rates to go up to spark that rotation of money. And gold and silver mining stocks usually outperform in the beginning of a commodity bull market. They underperform on the back half of the commodity bull market. So here we are. This is the dollar index for today. We're going into our technical analysis on the daily updates. We saw the dollar drop little, between 8 and 12. Between 8 and 12, we saw gold take off. Dollar weakness is going to be a huge tailwind to commodities in general, to all of our commodities. And I am expecting the dollar to decline because the dollar has declined even against the other basket of currencies in an expansionary phase of real estate. Every time it's done that. And with the alignment of that valuation that we saw with commodities to stocks, I think commodities are going to be an absolute winner over the next 5 to 10 years. Here's gold taking off, 1.44%, looking fantastic. Looking at the 10-year U.S. Treasury yield, it did bounce and head on lower here. We need this yield to go up to get money to rotate out of stocks. Right now, it's going towards stocks it's going towards stocks, gold. It's going towards everything right now. We are going to see a more powerful move in commodities when interest rates go up and money flees bonds and stocks. It's going to really rotate into gold and commodities. It's going to be a big, big move. It's going to be a life-changing paradigm shift if you can get this right. In my opinion, that's my opinion and my thesis. And you can disagree with that thesis. But gold, I put a big old line in here, kind of hitting the tops. We're right there trying to break out. I think if we close above 1840, it's a clean break and we're out. But the buying pressure today was strong and it looks fantastic in the short term. Same thing happened with silver. Nice little wick and good buying pressure. We have a bullish engulfing here. This looks like we're continuing upward. Let's hope the momentum can continue. And platinum's starting to show some life. Looks like we got another bottom in here. Looks almost like a bullish engulfing. It's real close. We just got to break this downtrend line. And I think we're going to see a good move higher over time. Doesn't mean tomorrow we're just going to rip it, next trading day that we're just going to rip higher. We might, but be patient here. The bulls are in control at the moment. It doesn't mean that they're in control every second of every single day. It may still take some time, but I'm going to see a move to break the downtrend and then a drift higher. GDX looking pretty dang good. Nice big buying pressure stepping in here. I like what I'm seeing. I'm starting to see a change where the buyers are taking control. And that's what we need to see. They took control this day here where we popped higher, 3 small down days with the contraction, and then a nice big move higher today. It's changing. That's what I want to see. SILJ, same thing. Pop higher, 2 small little down days here, big move higher. Bullish engulfing pattern under massive buying pressure with a little bit increased volume. I think we're going to have a chance to move higher here. We got to have the buyers continue to keep the pressure on. Here's Endeavor Silver. I think we're getting close to a bottom here. It looks like a bottom to me. Looks like we're starting to break this downtrend, and I think we're going to see a move higher. Looks good. The buyers are regaining control. Same with AG, same type of pattern. And if I were to throw something in here just to show you guys what I'm talking about is I'm seeing this downtrend break. See? And the buyer stepped in and pushed it higher. Looks fantastic to me. Franco-Nevada, same thing. Buyers stepping in. We had the big up day, 3 small down days in the contraction in the body lengths. The opening and closing prices were getting closer and closer, which means the buyers are starting to equal the sellers. Buyers stepped in here, pushed it higher. Exactly what we want to see. Wheat and precious metals, same story. Buyers stepping in, putting a lot of pressure. Newmont, same story. They're stepping in. Gatos Silver, I know some people on the channel like Gatos Silver. We're seeing buyings stepping in and pushing it higher. Looks good. Mag Silver, big up day, 3 small down days, big up day, buyers are in control. It's changing. And I can throw a whole bunch of other charts up here. They all say the same thing. The buyers are coming in. They're starting to control. And what you see is you see big white candlestick up days. They're ending strong. Buyers step in, buy the whole day up. Small leak off of sellers, couple down days. Then another big fat candle from the buyer stepping in. The dollar getting weaker is going to support this. So if you want to watch what's going to happen, watch the dollar and the 10-year. You want fireworks. If you guys want to see fireworks, the conditions for that to happen, and this is the value of the channel, is recognizing the conditions on where to put money. But the conditions where I think we're going to see fireworks, where things really start to move, higher interest rates, the 10-year yield. If that goes up and we see a weaker dollar, that's a commodity bull market right there. That's going to be massive fuel to this fire. It's going to be a hurricane force winds behind us, pushing us forward. And our valuations, perfect. They are so cheap. They haven't been this cheap in 100 years. So the valuations is the commodity to stock ratio. That is our value. Means all the money's over in stocks right now. The money's not in commodities. When this starts to rotate, where the money sells out of bonds, we're going to have a twofold increase here. This isn't like 2000s. I want to make this clear. It's not like 2000s. 2000s, you had a single bull market, a single rotation of money. Sorry, we had a bull market, but it was a single rotation of money. It went from stocks to commodities. Now, what's going to happen is if interest rates start to move on up, we're coming from a very low interest rate environment. We're not. I think if we have big rates of inflation, and it's going to drive interest rates quite high. I don't know how high, but we're coming from one, valuations that are incredibly low, and two, we're coming from interest rates that are just from nothing. So when this reverses, we're going to see money come from bonds and stocks and pile into commodities and precious metals. And we could see a huge revaluation of gold in relationship to the monetary base, because that hasn't accounted for it yet. If that accounts for it, we could see a massive bull run. I'm talking big time, like 1970s type bull run. It's possible. I'm not saying it's going to happen. I'm saying it is possible. It means that the asymmetric bet is bigger than what most people think. If you kind of take your biases and what you've learned over the past 40 years, because we've been in a declining interest rate environment for 40 years. What's coming ahead of us could be completely different. Could be. I didn't say it will be. It could be. And if interest rates were to go way up because of very high rates of inflation, you're going to see gold, silver, platinum. I mean, these things are going to take off, and they are going to rip it. What's the timing? I can't tell you the timing, the exact timing that this is all going to happen. It could happen in a year. It could happen within 6 months. It could happen in 2 years. It's 2 years or shorter. I don't speculate on the exact timing. What I'm doing is I'm getting my money and I'm positioning for the checkmate. Because when this happens, it could happen quickly. And you might not have time to position. So I'm looking at my positions, and I'm positioned in a lot of these things. I'm in gold and silver. I'm in platinum. I'm in physical metals. I'm out of the dollar. I'm in emerging markets. I'm in commodities. I'm in oil, natural gas. I'm in copper. I'm in royalty companies. I'm in uranium. These are incredible low valuations in all of these sectors. Incredible deals. I've not seen the ratios this cheap over the past couple of years ever in the market. And what that means is if the ratios have never been this cheap, if we've never had a deficit in the real estate market as large as it is been ever, which means we could have high rates of inflation if we go into a very large expansionary phase of real estate, or it's going to last a very long time. I've never seen the gold to monetary base this low. Guys, this is stacking up for a huge asymmetric bet, which could be, it could pay out massively. Does that mean you put all your money in all this stuff? No. I don't think that's a smart move. Stay diversified. Get a whole bunch of different things, spread it out. Look at some tech, Look at some things that could have some really big S-curves coming up, like solar. I also think there's good value in those areas because the growth could be so dramatic. So I'm positioning myself in all of these areas. Even hydrogen. I'm looking at hydrogen. I'm trying to find hydrogen type companies that could potentially do very well in a hydrogen economy. We are in the very early innings of all of this stuff, and I'm a long-term investor. So I'm looking at all this stuff. I'm piecing it all together, and I'm presenting it to you guys for free. If you guys like this content, give me a thumbs up. If you like this content and you want to learn, listen and get the updates, subscribe to the channel. And thanks for listening. This is Finding Value.